Hi guys, and welcome to our video for today, the 22nd of July 2026. Our second video for today, we're going to be analysing the stock CHAI and see what we need it for to continue today for the 22nd of July, Wednesday, as it pumped up a lot in after hours yesterday. On this one, it looked really good. And also we traded ZMB last night, which went up like loads, 40% from my entry in after hours last night. All in the Elements Trading Discord, so we had live trading last night. And just to show you real quick, this is our Discord, and then my alert was set for ZMB, first target of 10%, as well as a nice one in VIVK earlier in market hours. So yeah, we caught ZMB, and then I had an offering of something I saw this morning. I was just going to do the new video for today, and CHI is the one which pumped up after I shut my laptop and stuff. So be interesting to see what we need for continuation today. And let's get into it, guys. So I'm going to start on the 4-hour time frame. We're not going to look at the daily because the daily doesn't really carry through, and it'd be interesting to see how this one opens up in 25 minutes. But we'll start on the 4-hour. So it's a difficult one because we're getting rejected currently from the 200 simple moving average, 0.9. So I think this one is a good chance of retracing from market open in 25 minutes. Currently 3:30 Eastern time, 8 a.m. where I am. But yeah, once we open at 4. I think this one has a chance of pulling back towards 0.8 just because we're currently getting, we've not broken this 200 simple moving average yet. So there's a good chance that we reject and come back down, as it's a death cross retest. It's a potential area of resistance, and it's also an area where it can reject from. We're never really close to above it properly. So I think this one might pull back from 4, just for I guess. But what I can tell you is that we're going to look at exit strategies, entries, and what to do if you're already in this, and how to find a new position. And then we're going to write that down on a piece of paper, and then we're going to have one plan for what we need to enter this stock again, one plan for what we need to exit this stock if we're already in this, and where our take profits are going to be and where our stop loss is going to be for the next 2, 3, and 4 points. And then we're going to just have it in front of us and wait for it to happen and apply it. That's how trading works. That's what I do. You can have little guesses in between. I think it's going to pull back and market open, etc. But the main thing is that you stick to your plan, and we're going to write that down and apply it. So, right then. So, new entry in this one, I'd wait for a push beyond $1. Because once we break above $1, we should move and gap up towards 1.2, and then we should continue a bit further. But I just have a 20. Look, this one is already pumped up quite a lot, and we do have to wait to see how it opens and market open. But my first target would just be 20% on this one, around 1.2 resistance, sell around there. So I'd wait for a push beyond $1 in this, and then I'd sell for 20%. For 50% of my position, I'd sell at 20%, and then I'd probably sell some more later on, and we'll look at more price targets. So once we get above $1, that'll be an entry in this one. And 1.2, so around 20% would be a first target on this one. So 20% first target, sell 50%. So that's take profit 1, sorted, and entry sorted. However, on this one, if you were to lose 0.7, I do think we're done. We've got 0.65 as a level, as support, but I think we've got another short-term complements of support here, based off the 4-hour, and we acted as support and resistance here. So support here, resistance here, and then we tried to sort of break beyond it here. You can sort of tweak it along like that a little bit, and we never really failed to build upon it. So when we finally did, we broke through parabolically. So it basically is just it has acted as a bit of a level before 0.7, 0.71. So once we lose 0.7 in this, I do expect it to be done and come back down to 0.65 and 0.55, etc. So for stop loss and exit strategy in terms of not have massive losses, if it goes beneath 0.7, I'd look to cut this one, and then yeah, and then if it does pump back up and breaks beyond $1, we'll look for a re-entry, guys. So that's my analysis on that one. And also, just looking at this here more carefully, the Bollinger Band top, this navy line here, 0.68. So yeah, if we come towards 0.7, we're going to be close to 0.68, and we have a good chance of getting sucked in the Bollinger Bands, where 95% of price action takes place, and where it feels comfortable 95% of the time to just do nothing, and we want it to continue upwards parabolically and do well, so we need to stay outside this blue line here. So once we get sucked back in this blue line here, it's like getting sucked back into a black hole. It's not good. It's going to just send us to the abyss, you know what I mean, of nothingness. So once we get sucked in this blue line, it's not going to be good, and we need to stay above it, around 0.67, 0.7. I'm just going to call it as 0.7 based off what I've identified so far. And yeah, above $1 would be an entry in this one. Until then, it's just consolidation. I know it's a very large consolidation, but that's just what it's like in pre-market and after hours from small cap stocks. And yeah, I don't want to also see a red candle where we reject and then start to print like a I don't know what happened. There was an update on Weeble where it became a bit harder to draw candles. But what I'm trying to say is I don't want a situation where we get a not a morning star, an evening star, similar to a morning star, but it's the wrong other way around. And it typically looks like this. This candle can be red or green up here, it doesn't really matter. But ultimately it's where it's like this green candle here has another green candle around here. We don't build upon a dollar. So then the third one is a red one. So it's two green candles with decent candle body, followed by a red candle body as an evening star, typically. And you can learn more about that in our Discord and the Candlestick Seminar, the Week 3 seminar. So that's why I don't want to see and print a rejection pattern instead of a continuation pattern. So yeah, it's really simple, guys. So in summary, if it breaks beyond a dollar, you can get a new position on this and look for 20% first target. And that's obviously take profit one sorted. And then if it goes beneath 0.7, you can look to cut it if you're in it. And obviously stop loss levels, etc. Just because I have a 20% first target, if it were to break above a dollar once I enter, I would look for 20% stop loss as well to match my even risk to reward. And we need to take profit 2 now. So we'll go to daily. So take profit almost around 1.2. Selling 50%. Right. Okay. So around 0.8, right? Where we are right now. 0.9, 0.8. So yeah, my next target would be the next resistance, really. I would sell somewhere around 1.6 on this one. So I'd have 20% first target, then sell 40% around 1.6. So that's around 50%. And then I'd ride the rest towards 2.2 to 2.1, where there's 200 simple moving averages here. So it's 3 take profits. Sell 50% at 1.2, or 20% from the entry. Sell 40% around 1.6, and then sell 10% of the remaining shares around 2.1 for this 200 simple moving average to for death cross retest. So we've covered all aspects there, guys, and that's how I'd apply it. If you want to learn how to chart like me and understand charts like me, you can also join the Discord and learn off me in live trading and ask me questions or book a one-to-one, as well as go through my whole seminar package and maybe do my crash course as well, if that's something which takes your interest. And yeah, we had 2 nice wins as I showed you earlier before on this one. So yeah, I'm going to go dry my hair properly as I look a mess in the last video. And yeah, get ready to trade the market when it opens and catch you all later.